Kevin, it's always good to see you. And the sector in the spotlight right now is healthcare. And you see two basic ways to go at it. One would be through large pharma. The other would be through biotech. Obviously, these sectors hold up because people keep getting sick, no matter whether the economy is good or bad.
That is true. And I think we will soon learn, Tyler, that the economy has fallen into the technical definition of a recession. We learned that first quarter real GDP fell by 1.6%, and second quarter GDP is estimated to have contracted by another 2%. Two consecutive quarters of negative real GDP growth meets the technical definition of recession. We also know that the yield curve is currently inverted, with the 2-year yielding about 20 basis points more than the 10-year Treasury. The yield curve has predated a recession in terms of inversion every time going back to 1955. So I believe that we are within a recession right now. And healthcare, based upon our research here at Smart Trust, has been one of the sectors that has been an outperformer during periods of economic slowdowns and recessions. Now, if you're aggressive, maybe you wanted to tack it through the small cap biotech route. If you're a little less aggressive and want to be a little bit more traditional and defensive, then you look at some of the larger cap pharmaceutical names, Tyler.
And these, and repeat that fact for me about how healthcare has performed in prior downturns.
Yes. So healthcare has been one of the top 3 performing sectors during previous slowdowns and recessions. For those of the viewers out there wondering right now, how do I access healthcare? Well, if you want to play the large cap pharmaceutical route, Tyler, names that we like at Smart Trust include Merck and Bristol Myers. Both of these large cap pharmaceutical companies have yields of about 3% and continue to have excess cash on their balance sheet, which they may start deploying. In fact, Bristol Myers Squibb recently announced the acquisition of Turning Point Therapeutics. On the small cap biotech route, well, we like names such as Axsome Therapeutics or Corona Therapeutics. These are smaller cap biotech names that provide therapeutics or treatment for central nervous system disorders. Both of these companies currently have drugs in the FDA approval pipeline and may be of interest from some of those large cap pharmaceutical companies with excess cash looking to deploy that cash and actually acquire these solutions. So 2 ways to play the healthcare route, and I think both will hold up very well in the face of an economic slowdown.
Kevin, what if I told you I didn't think we were in a recession in the first half of the year, and I don't think we're in one now?
I would just suggest that you look to the actual data, Kelly. What feels different this time around, and I agree with your contention, is that the employment market is still holding relatively firm. And we also know that the consumer continues to spend. But we're starting to see slowdowns in both of those areas as well. We know that initial jobless claims are starting to tick higher. And we also saw that the Federal Reserve recently revised their unemployment target for the end of the year up from 3.5% to 3.7%. As it relates to the consumer, yes, the consumer drives the U.S. economy, accounting for 70% of our economic growth. But they're now starting to dip into their savings and put more on their credit cards to help withstand those inflated prices.
We've got 30 seconds or so. I assume you expect the Fed in July will raise by 0.75 of a percentage point. What do you see as their path going forward in September, November, and then December? What will they do then?
Great question, Tyler. I think they turn less aggressive in the face of this economic slowdown, which I again believe will meet the technical definition of recession. By the end of the year, we see the Fed funds target rate at 3%. So if they raise by 75 basis points in July, which I believe that they will, that's only 75 basis points of additional hikes for the balance of this year.
All right, Yuda Mon, Kevin Mon. See you, man.
Thanks.